Hello, everyone. We're really excited to see you all. Welcome to another episode of eToro's Invest with the Best. I'm Shani Blackman, a client relationship manager. Thank you for joining us today. Our guest is, as you see, Ingvar Rückemann, which his name is Ingvar, a value investor in the program. Is a value investor with over 3,000 copiers and positive results for over 4 years in a row. Including 2022, which was a very hard and tough year to pass like that. So just before we start, make sure to remember to subscribe to our social channels and our YouTube channel. Ingvar, how are you? How are you doing?
Very good, thank you.
So really excited to have you here today. Thank you for joining us.
Thank you for having me.
I would like to start with our first question, and then we're just going to make it as a conversation regarding, if you can just start maybe by sharing a little bit about your background and what initially drew you to the capital market.
All right, yes. So hi, everyone. Glad to be here. And I think most of the participants today, they have probably read my biography on eToro. So I'm just going to stick on the part which made me the investor which I am today. And when I think back of that, I've really been interested in business, economics, and finance already 20 years ago when I was in high school. And then it was just logical to follow that as an education as well. So I did study also business. And then afterwards, I pursued that in my career as well. So there were always elements of business, finance, economics in whatever I was doing for the past at least 15 years. And now I sit here today as an investor on eToro.
How did it feel?
Very good.
I know. It's very fun. I've been working with you for a while, and it's amazing journey. So I would love it if you can just, elaborate a bit on your investment strategy and how, you developed it over time.
Yes, yeah. So I am a value investor, which means that I like to find the bargains in the market. And it's really a bit interesting. How do you get there? It's because I can't really say that I started out as a value investor. The thing is, when I started investing, say with real money, that was actually just around 10 years ago when I started earning my first real salary. Because before that, it was not really something which was that available to me. Because let's not forget, actually, even 10 years ago, it was not that common yet that you have zero commission trading, right? So it was still quite expensive to buy stocks. Luckily, that has changed. But anyway, when I started investing my own money, say 10 years ago, the first thing which I did was, of course, trying to look for funds. I was just trying to find a good fund which fits me, which is going to bring me further in my investments over time. And I remember that was actually quite tough because you start out with a huge list of funds and they all have fancy names and you think you find something which fits your style. And then you look into it and then all of a sudden it doesn't fit anymore. And you also find out that most of those funds actually invest in more or less the same stocks. So I did not really like that. And in the end, I decided, okay, it's actually much more exciting to just look at single stocks because there it's much easier to find out what's really going on. You've got all the documents online. You can really drill down into the details. You understand the company. And that was just so much more entertaining.
Yeah, and let's not forget, as you mentioned, that only in the past years we have everything online and we can check everything online, and it's a bit easier, but we have much more knowledge to check. And with that, I would love to understand a bit so obviously you shared how you got into that and what did you do, how did you develop it over time, but I would love to understand a bit how do you decide, if you can guide us through your investment process. How do you decide which position to open, when to close a position? Just
Absolutely.
guide us through that.
Yes, of course. So the first thing is, of course, I love being informed about financial markets. So I really follow everything which is happening in the markets on a daily basis, simply because I find that interesting. That's also why I made it my job in the end. And then, of course, you hear a lot, what's going on the macroeconomic level. And at the same time, of course, you sniff out a little bit the opportunities where they might be at any given point in time. But basically, if I really look into companies, I usually start with the financials. So I look at the financials which are readily available. I look at price earnings ratios, for example, and that usually gives you a good first indication if there is some potential for investment from my side. So in that case, as a value investor, I look, of course, for low PE ratios, things like that. And that is a good starting point. It does not tell you the whole picture, but it gives me a good start because that tells me, okay, is it worth spending more time on that company? And if the answer to that question is yes, then I drill down more into the company. By now, in many cases, I do already know the company because I've heard about the companies before, and maybe they were not attractive as an investment before, but at least you know what the company is doing, you understand the business model, and that makes the process a bit quicker because you can really quickly go into the financials and see if there is actually potential there. And then if the answer to that is yes, then of course that increases the chances for opening a position in that company.
So you basically believe in really, really knowing all of the fundamentals of a company before buying it.
Absolutely.
I
I
see.
think that is crucial. And I believe also many famous investors in the past have said that as
Mhm.
well, only buy what you understand. I think that is crucial.
I think you're right. I think you're correct. It's a really good advice. Only buy what you believe in and understand. Um, so do you have any insight, on specific companies, sectors or trends you believe will be, significant over the next 5 years? And obviously, what makes you optimistic about that? And
Yeah,
as I mentioned at the beginning, this is not an investment advice.
clearly. So of course, when you think about the big mega trends of our time, I can't talk about that without talking about AI. So clearly, artificial intelligence is all the rage still, and also rightfully so. And I think that is important even for my portfolio, for example, right? So if you look at my portfolio, you're not going to see much exposure directly to AI. That is just something which I leave to others because from my point of view, it does not really fit very well into my portfolio.
Mhm.
But I think it's also important to recognize the potential which AI brings for companies which are not NVIDIA, for example. Because in the end, we are all expected to use artificial intelligence in one way or another over the next
Mhm.
couple of years. For myself, I already do. Yes, I work, of course, with ChatGPT, and I feel that it really brings me a lot. It's much quicker than the average Google search and gives me much more context for the questions which I have. And if I project that on many other companies, which might also have other possibilities to exploit that technology, I am really convinced that every company over the next 5 years is going to be able to use AI to its advantage. So that I think is very important to recognize. Right now, clearly it's about NVIDIA and a couple of other companies which are really starting that revolution, and that is fair. But I think it's really important to also see that this is really going to affect every single company on the planet.
Mhm.
I think that is good for the stock market as a whole. I can't really say yet that one or another company is going to be more or less successful in applying AI and using AI in their operations. I think that is a bit hard to see right now because companies maybe don't really have a plan themselves. I think it's just going to crystallize a bit more over time. But anyway, I think it's really a good backwind, a good tailwind for the stock market as a whole.
Okay. And still you mentioned that your account is not very AI oriented.
Exactly. Yeah, I don't have much exposure to AI in general because I believe that is really more the growthy part of the market where I
Hmm.
personally feel more comfortable investing in other companies. As I mentioned
Got
before, I
it.
really like to drill down into the financials. And of course, you can see great potential
I
as
know.
well in Nvidia, but in my opinion, there is just too much of a multiple on the earnings which they currently generate. And I personally don't really feel comfortable putting that into my portfolio too.
Hmm. Okay. That's a nice insight. Interesting. So I would love to hear, obviously, you invested for quite a while. So I would love to hear a little bit like, obviously it's challenging and everyone encounters setbacks. What was your, biggest mistake and what did you learn from it? Additionally, which specific investment, you are mostly proud of? So biggest success,
Yes.
biggest.
So basically, one structural mistake, which I think is very easy to make, is to have too much cash. And I'm mentioning that because it sounds a bit counterintuitive at first. Cash is always a great thing, right? But I have realized that firsthand in my in my portfolios, yeah, not only on eToro, but you could also see that on eToro at some point in time during the last 4 years, that sometimes you just have too much cash, right? In my case, for example, in my eToro portfolio, there was a time, a couple of months, where I was easily at least 20% cash in the portfolio. That was the time which was, say, 21, 22, right? Which was still the time when the pandemic was still a big topic. And if I'm being honest to myself, at that time, I was probably thinking, okay, there will be great opportunities to buy, so I need cash, right? The only problem is if that does not materialize, if there is not another market downturn, or if the companies you might want to buy are not going down, then you're never going to be able to deploy that cash. And then it is just sitting in your account doing nothing while all the rest is going up. So that is really a big missed opportunity. And you feel that, of course, over the years, right? If you have 1 or 2 years where you had too much cash and all the rest is going up, you're not going to be where you could be.
So this is your biggest regret, basically.
Yes, structurally, yes. There are always single companies. If you want, I can elaborate on that a bit as well. It is not something which I did in my eToro portfolio, but in another private portfolio of mine. And that story goes back a couple of years. I think even it started, say, 6, 7 years ago, and it ended maybe 3 years ago. So it's long in the past. But I think if I put that down into a lesson learned is don't go for the story alone. Because what I did at that point in time was I found this little company in Australia, which is called Lithium Australia, LIT. You can check it out for yourself if you want to. That story for me began in, I think it was maybe 2018. Don't quote me on the exact year. But at that point, it just felt like the company has great potential to develop a new way of extracting lithium from the ground. And it just sounded like a great story. And I don't personally understand too much of how that works simply technologically, but it sounded promising, right? It sounded like a good story. So I invested a small amount into that company. And I even held the position for a couple of years. And I thought, okay, it's going to come eventually. It's going to take time. You have to be patient, right? But then, of course, you follow the company also more because you are invested in the company. And then all of a sudden you realize, okay, they are just asking for more money every year or every second year, right? Because they need more money since they're burning money. So, okay, then you can decide if you want to invest more money or not. I don't think I did actually. But anyway, you just get a bit uneasy over the years when the company is just asking for more money. And in that case, I remember also checking, of course, the annual report even more in detail than I already did in the beginning. And then you also see how much money, for example, the CEO is pulling out, right? And if that is, say, $500,000, which I think it was in that case, then you feel that this is maybe not the right thing. The company is asking for money. At the same time, the CEO is being paid a decent salary. Okay, maybe the CEO is very good in his or her job, then maybe it's justified, but it still felt like a lot of money compared to where the company had gotten in that time. So over time, I just felt, okay, there might be other opportunities for me to invest that capital. So I took the capital out from there. I sold with a loss, of course, and then I found other things which made me happier.
So I think a few things that you can learn from what you just said. I think it's something that you implemented before. Learn the company, understand the fundamental. Do not invest in something you don't fully understand. And, unless, you follow someone that you believe that he is someone that you understand it. But basically understand the fundamentals, understand the company, and do not fall for the story.
Exactly.
Okay. So obviously, I would also like to hear what is, the investment you're most proud of and why.
Yeah. To be frank, I usually tend to be not too proud of just any single investment. If I look at my portfolio right now, there's one company which I feel actually quite good about. I'm just going to mention this. There's another company which I feel proud about every year. But if there's one company in my portfolio which I feel proud for picking is Vopak, VOPAK. That's a company from Holland, and they are basically building infrastructure, energy infrastructure. That is a stock which went very well for my portfolio this year in a very short time. So I really feel like I picked the right stock at the right time.
That's amazing. Amazing. Amazing choice. So obviously, as you mentioned before, emotions play a big role in investing. How do you handle them during, for example, a bear market? This market is pretty volatile. So how do you handle your emotions and just, keep your strategy?
Yes, it's a very good question because I think it is one of the most relevant things in investing, especially nowadays, right? You get so much information. You're really bombarded with information every single moment of the day. So you see the news, you hear the news, you get it on your smartphone all the time. So it's really hard not to be emotional. It's really hard to pull yourself out of that. And I can't say that I'm completely immune to emotions. That would be a lie. So, for example, in the beginning of August, not that long ago, there was a very turbulent period in the market. And I still remember that I also felt at times, okay, what is going on, right? You just feel a bit uncertain. And that is actually exactly the point. It's very good that the last episode of Market Turmoil was just recently. So I think most people still have in mind how they felt. And I would say everybody who is invested to a reasonable degree in the stock market probably felt something in those days. Yeah. Maybe some people felt even happy that the market was going down for buying the dip. Yeah. I don't know if they actually felt like that on the Monday when everything went down, but in hindsight, maybe you felt like it was the right choice. But anyway, for my part, I can say that on those days when the market was quite shaky, I did, of course, feel, okay, what's going on? Am I correctly positioned in my portfolio? Is this going to get worse? Of course, those thoughts are always there any given day. And that's also why I'm saying it is so crucial to actually analyze yourself. How does this kind of stuff impact you? And then also develop strategies, how to deal with that kind of stress, right? Because it is stress in some way for everybody, I'm sure. And that is something which is very personal. Everybody has their own resilience for stress, right? And it impacts some people more than others. And I feel that for myself, at least, I have found good ways of dealing with it, right? Just as one example, I tend to not have push notifications by Bloomberg on my phone, right? Because I think it is just too much is coming all the time. And in that sense, I
Too much
control when I
info.
see the information. Exactly. It is just too much information. And it is very important for me, right? Because I know that basically every human is impacted by the stuff you hear and see all the time, right? There is just no way around it. You are always going to feel something about stuff which is happening in the world. I hope you can still hear me because your picture just froze.
You?
Yes, I
Yes, I
think
can
we
hear
I
you.
think we are
Continue,
back.
please.
Great. Okay. So I'm just gonna continue. Yes. I think it is very important that everybody develops strategies how to deal with emotions, basically, how to deal with
Mhm.
stress in the market. I feel that for myself, I have come to a point where I feel that I can deal with it. So I feel fine with it. And actually, the episode in the beginning of August was a good test if I'm actually able to deal with the emotions. But
So,
it's also a never-ending story. I think it is very
yeah.
important to continue working on yourself. And if I may share one thing which I did on that Monday in early August, and that is, I think, something which applies to everybody who might at times feel stressed about the market. If you feel on any given day when the market is shaky, when the market is going down, or maybe even if just one of your investments is going down, right? The most important thing is to not over focus on it. Of course, it's important to stay to know what's going on. But if you have that feeling, which I'm sure many people have, I need to stay on the computer, I need to see the price action, I need to listen to what Bloomberg is saying. Do that only to a certain degree. Pull yourself out of that. Just go outside, go down on the street, go into the forest if you have one close by. Take a short walk, just 10 minutes, just to get yourself out of that state of mind of overstimulation.
I, so I think it's a decent advice. Obviously it brings you to the question of like, how do you approach risk management in your portfolio?
Yes, I think it is really you need to approach that strategically. So it does not help if the market is going down and then all of a sudden you assess the risk you have in the portfolio. You need to know that way before. So clearly it starts already with the structure of the portfolio. What kind of companies do you buy? What kind of sectors do you expose yourself to? And then, of course, it also goes down to the company level. Which companies do you buy? Do they have strong balance sheets? Do they take on too much leverage, for example? All these factors play a role in your risk management. And then, of course, there are some time-tested strategies how to mitigate risk in your portfolio. And that is usually you should diversify between sectors. So that is something I do. I try to diversify between different sectors.
Mhm.
However, with my approach, I feel confident that I don't need to diversify between every sector, right? So I still feel I can overweight some of the sectors because I feel very confident about the company. But in general, I think it is always good advice to diversify between sectors simply because that reduces the risk in your portfolio. And then also on top of that, always make sure to do your research. Make sure that you actually buy a company for the right reason.
Yeah, as you said, not just a story.
Exactly.
So do you have any, messages or advice, you wish to share with the investor watching this, or any,
I
advice? Yeah.
I think it is important to understand that everybody has a different situation in life that includes life itself and also the financials. And it's really important for that reason that everybody understands what investment strategy fits best to one's personal circumstances. And what I mean with that further is that that is not the same thing when you're 25. It is not the same thing when you're 45, right? It's going to change over those 20 years. So I think it is really important for everybody to appreciate that and to understand, okay, what are my circumstances and what kind of approach to investments does help me under my current circumstances. And then also be ready for change. For example, every other year, just go over your situation again. What kind of life situation do I have right now? How does that impact my financials? And how do I need to adjust my investment strategy accordingly?
Interesting. So I think we kind of, we got some very valuable advice from you, Ingvar, as I guess from the beginning. Thank you very much, everyone, for attending this session. Thank you so much, Ingvar. It was an amazing session, and have a
Thank you.
great day.
My pleasure.